Today's topic is really important, and I am thinking that in one of our Saturday longer sessions, and I want to dive into the buy and sell business and really kind of give you the seller, the buyer perspective. Obviously, I always say that when you get into legal dealings, and it is always you win or the other party lose, or the other party win and you lose, right? So it is always like there's someone is lesser will lose or win when you get into legal case. But in taxes, I always believed, which is most of the tax practice, and the buyer can win, the seller can win at the same time. But when you get into certain selling, certain way of selling, and that doesn't exist, and you do have one party will have greater tax savings, the other party would not. So this is what we want to explore. But today, for this 30 minutes, I want to just talk about share sale. Pretend you are a small business owner and your business is successful. For whatever reason, you want to sell your business. But of course, you can sell your business in variety ways. The list can go on. You can sell your business by saying, I'm just going to give it away. That's also one way of doing it, right? Or you can sell it to another company, or you can sell it to a person, and you can sell just your assets, and you take care of the liability, you take care of the rest. And you can also sell your share. You can also sell your whole company with the name. Here you go, everything is yours. Nobody even needs to know that I'm not the shareholder anymore. You are the one, right? So there's so many ways we're selling a business, but today's focus is on share sale, because when you sell your business by saying that I'm selling my shares, it is all yours, and what that means to you as a seller. So that's where our focus is today. So now what you are seeing is our website. You can always come to communitycpa.com. And, people ask, what is communitycpa.com do? I will tell you that we are the person, we are the we are the accountant and the tax preparers and the business consultant, and we are the attorneys, and we have attorneys in our firm, and we are the one that serves small businesses that you don't want to go to HR Block, and you're not ready to go to KPMG yet, and you're right in the middle. You are a successful small business, then you are the communitycpa.com candidate and to utilize our service. And on our website, you can see we have webinars listed out, and as long as we plan it out, and it will come through, so you can always see what we have in our pocket to talk about. And our webinars is really come through your requirement. And we have so many clients. Every week we have our firm-wide meeting, and we talk about things our client need to know. And when we knew the topic coming up, and we talk about it, the share sale comes up because we have clients selling business. When I ask, how do you sell your business? Are you doing asset sale or share sale? They don't even know, that question. They didn't even think about it, but that's what you need to think about, right? So that's why we're here today to talk about that. Say you don't have time, you cannot come to our meeting, then today, and you know that whatever we talked about on internet will also be showing up on YouTube channel. And this is our YouTube channel. You can subscribe to it, and you can search our video by coming into this magnifying glasses and typing to what you want to know. Then you will have the videos come out. And we're really trying to give our knowledge to the public. It is not that we don't need your business and you do it yourself, but as much as you can do it yourself, I still believe the best person to take care of your business, it is you. It is nobody else. Yes, you don't have to know how to run tax forms, but you can know all the knowledge, so you can tell the people who does your forms, say, hey, I know that I need section 1202, things like that. So we want to make sure that we give you our knowledge selflessly, and we want you to take advantage of that. All right, let's go to our video, go to our PowerPoint presentation. As I always said, it's not because I'm trying to make it boring and you don't see me. There's nothing, I don't really have a lot of entertainment going on, so there's no need to watch me, but I want you to have the PowerPoint because these are prepared. So we didn't come onto here just chatting the daylight, and we are here preparing our knowledge so you have it. And now, of course, we want to say that the knowledge we have in here is limited to what we know, limited to our research, limited to our time. And time might expire those knowledge, so use it carefully, right? And do not, as a business owner, you have to learn how to place your own judgment on the knowledge. Don't believe in everything on the internet. Don't believe all of the things Yin says and test it. Make sure that's right before you say sum up and you did a good webinar, right? All right. So a small successful business owner wants to sell the business. So of course, these are just regular things I want to tell you, so you actually know that you need to do that. If you really are thinking, you need to figure out the reasons of sell. It is recommended you don't tell people that I'm so frustrated, I hate my business, I am just wanting to throw it away, right? You are a successful business owner, you got to this size, and you are amazing. And you only want to sell, maybe your priority in life is different. And then maybe, the succession plan doesn't come through. None of your kids love what you do. That's not rare, right? That's so often happens a lot. Okay, so that is the reason for sale. You want to prepare that because everybody will come around ask you that question. And the timing for sale is also very important. For example, if you really want to sell a CPA firm like that, you can't sell during tax season. You're so busy doing taxes. How could you do that, right? So you want to plan your lighter season and really plan that. Or if you sell restaurant, and don't sell the restaurant when you know that your peak season is what, right? And timing for sales, and that's really important. So really keep that in mind. Business valuation. I'm not saying that you need to pay $3,000, $4,000 to go get a business valuation. No, you don't need that. All you need is your tax return, and there are numbers on your tax return. And we have a very simple way to do business valuation, and there's 3 numbers on your tax return. If you get them all, and you multiply and subtract, you divide, and you get your sales, you get your business valuation. So those are the knowledge that you will get from your CPA that who works with you on your taxes. So make sure that you do have a number. You cannot be like, okay, I don't want to pay for the valuation. You said that I don't need to do it, but I also don't know what numbers I should give. And you at least need to get a consultation session together and sit down with your CPA, have them give you the opinion. And we have seen a lot of merger and acquisitions this last 2 years. So if you ask me, I probably would be able to reference to 1 or 2 of my clients who sold the similar businesses for the last 2 years. And I, of course, cannot give you the name and who sold it, but the knowledge is here. The knowledge is in the firm. So we know that what kind of price you should run for your business. You got the price, then you need to look for buyer. My advice to you folks, you don't need a broker. And of course, you can go to broker, and they do have a different network for you. But even if you go to the brokerage firm to do that, you want to sign the agreement to say that if client you find it on your own is not included in their commission, okay? What I want to tell you is because you're selling, so you're the one paying the commission, and actually the buyer, you already know the buyer. When you work your business, you already know your competitor. You already know your vendor. You already know the people who are really working with you and give you advices. You already have the buyer. Those buyers are among the people you work with. You already have employee who wants to buy. So keep that in mind. I always tell my small business owners that the buyers is among us, and you already have them. You know them. Okay? So you can go to a brokerage firm, but you can find buyer yourself. And always be prepared. So you need to get your taxes filed, right? Your financial statement cleared, and you need to have your potential buyer sign non-disclosure agreement, NDA. That is very important. You don't want to open your mouth to start talking about your business without the other party and sign the agreement, so they cannot go out tell everybody else in the neighborhood you're selling, right? So making sure that you sign that and NDA agreement. Then of course you got a gain. You got a gain, and I hope that you are a successful small business owner. You're selling for a gain. So now you have this gain. This is why, and you want to do tax planning. Coming to your CPA firm, coming to Community CPA, we plan that out for you, right? So now let's just focus on small business owner. I know every time I do these kind of webinars, this next slide, there's two major ways selling business, right? And I know someone's going to say, no, Ying, that's not right. There's so many other ways to sell it. Of course. There's so many other ways to sell. You can even sell your business to your irrevocable trust, make it more complex, and there's many ways to sell. But the basic way, the small business ways are these two. You either sell shares or you sell your business content. What I mean is the list of clients, the asset, and or you can even sell your location because you got a good location, right? So anything that inside of your business, including your building, that is sellable. When you sell the business, you can sell assets, you can sell your share. But when you sell your share, and does the asset go with it? Depends. Because if you sell your share, but your company share does not have the asset listed as a company asset, then it's not included. And remember, sometimes if you are my client, you would know that when you are running, you set up a bar. You're setting up a bar business, and the building is yours. I would absolutely require you to move the building out of your bar business. So under your bar business, you had no asset other than those counters, fixtures, inventories, food supplies and things like that, right? Utensils. Those are the things you have on your bar business financials. When you sell shares of that bar business, it has no building. Then your building is something that as an owner, you might lease to your new buyer, right? So when you sell shares, it is dependent on what was included in the company. So that would make the share to be different. But let's say if you have your building under your company EIN number under the share, then of course when you sell your share, you sell your building too, right? It's all included. Selling share of the company, and especially selling all the shares of the company to a new owner, that is literally you walking away naked, and that person comes in with your clothes on. That's what that is. Okay, so you want to know that because he's putting on your clothes, he's not only taking over your asset, he's also taking over what? Your liability. If you have vendor bills that you forgot to pay and happen to be $1 million, too bad and very sad, that person will have to pay for that because he bought your share. He didn't buy your asset, right? He bought the asset and the liability together. Now, overview of selling of shares. In a sale of shares, the company shareholders sell the share, entitling the ownership of the company to the buyer. Yes. And the shareholders are owners of the company, right? You are the company owner, you sell your share. all the right responsibility attached to the ownership of the share, such as debt and liability, are transferred to the buyer. The sale has minimum impact on the company operation. That we get it. Because you as a shareholder, and you sold that to me, you walk away, I am the owner, I probably don't have to show up for a couple of months. The company would run by itself because I have managers all in place, and you have the manager all in place for me. So the company operation goes as normal, and you don't need to change EIN number. Your payroll goes normal. Nobody needs to get fired, even though you may want to fire some people. So the company operation goes normal, right? So it is very possible when the new shareholder comes in and they want to do a lot of shakeup, but you don't have to do the shakeup, right? You can just walk in as normal, nothing happens, right? If you sell all the shares in the company, and you literally selling the company itself, of course. But if you sell half of the shares of the company, then you are joint ownership with the new buyer, right? And your business has to be incorporated to be sold in this way. So what that means is, if your business is not incorporated, you can't sell shares. If you are LLC, sole proprietor, you don't have shares. LLC has a membership, it's not shares, right? So that gives you an idea. To sell shares, you probably is S Corp, C Corp, right? So that is how you operate. And you may say that, oh, Ying, I am LLC, but I elected to be S Corp, so I can sell shares. No, you are a membership. See, LLC elected to be S Corp. It is like you're born as a girl and you dress like a boy. It doesn't change your gender. You're still a girl, right? So when you get down to the very bottom, you are a membership, not shares. Make sense? All right. So those elections we're talking about, it is really what we call a tax treatment election. It is not changing your gender. It's just clothes. It's just the look, the outside look. Tax treatment means it's not your Secretary of State registration. It is not that. It is just the tax treatment on the tax forms. So you don't do 1065, you do 1120S, right? All right, reasons your company may sell stock, right? So there's many reasons. You know, majority of actually, whether you sell stock or sell assets, a lot of reason is just because you want to get paid. You're done, right? And you have more debt to pay down. And all these reasons are reasonable reasons. And so the share sale has a advantage, which you can stage it, right? You don't have to sell all of it in one time. So let's say you had a buyer and you felt like, you know, I just gonna sell 10% first year, 50% the second year. So during the first year, I can still kind of make sure that he's okay, taking over my business is fine. And, you know, a lot of our small business owners, you know, we build this company, right? It is like our babies, am I right? It's like your kid. Do you want to give your kids to foster parents so the foster parents going to destroy them? And then you want them to grow and to grow up and do better with the foster parents. You want the latter. You want the kids to still grow bigger. You want the kids to one day become president of the United States, right? So really, that is what you are doing. And you want to sell 10%, 20%, and then slowly, and you just, you know, giving all of it to this person. A lot of parents are doing that with their children, okay? And when they do that, there's a huge tax advantage of doing that. They do that through gift tax. If you have a business that you want to sell shares to your children, hold on to that. You need to talk to the attorney. You need to talk to Community CPA to see how you do that through gift tax, which is not taxable for your kids. And it is a transfer that a lot of privately held companies are doing. So that's just a little tip for you to remember. All right. Then who to sell to, who is buying it, right? So when you sell, whoever you sell to, that person is buying a stock. You know what it means by buying a stock? It means that they're using their own money, buying a stock, just like you buy a stock from Microsoft. You buy a stock from Amazon. When they do that, that's your investment. It has no tax deductions allowed for the buyer because they're buying a stock. But for you to sell, that is different. So we will tell you that, the shares sell from the seller standpoint. But this is where we are talking about people who may buy you. These are venture capitalists. They're a big deal. And equity partner is a big deal. And I had done a couple of business buy and sell. The buyer is not an individual, it's actually an investor group. They buy that business, they buy your share, they own it. And that's it. Okay? So the buyer is not just individual. It can be other businesses. Community CPA can buy another CPA firm, but it's not you buying it, it's Community CPA buying it, right? So it is a business can buy, individual can buy, and the investors can buy, a venture capitalist can buy, an angel investor can buy them. And so these are equity investors I was talking about. Then from the buyer perspective, and I touched on that already, they really don't need to do much because they buy your shares, they're a shareholder, and then based on the agreement, they can do whatever things to your operation. If they're a minority shareholder, they really cannot do much to your business, and they still have to, maybe you can pay the buyer a salary so the buyer can work in the company with a minority shares, then slowly you sell your shares to that person, then become majority shareholder, right? And let's go for share sale from the seller perspective. So I want folks to understand a section called 1202. And if the number is not your cup of tea, remember this one. This is the qualified small business stock exemption. And basically what it says that if you have a qualified small business, and this small business is not very small because it says that if your asset is less than 50 million, I'm trying to think that the business is at over 50 million. We have businesses that are running at 120 million a year on sales. These people have more than $50 million asset. But majority of our small business, we don't have $50 million asset. And you need to hold the shares for more than 5 years, and then your asset is smaller, and then you qualify for this exemption if you're a qualified small business. Okay, so now what is this? This means that your capital gain, you're selling your shares. Let's say your share value is 1,000. When we form a business brand new, a lot of times our attorney, I see them using the capital stock as 1,000 as a base value. Let's say it is 1,000, but you sell for $1 million. You got what? $1 million gain, basically. It's $1 million minus 1,000. And so this gain, and you have 10 million as a threshold. You can't go over 10 million gain for the exemption, but anything under that, and you are actually don't have to pay taxes, don't need to pay federal tax on the capital gain. So this is where I want to bring this concept to you. You don't have to remember all the words, and you just need to know if you are a corporation, if you are selling shares, and you may have a chance to qualify for the exemption. So now let's look at who qualifies. And, when you are not in the situation, it is very hard to remember all of the things. I understand. But, my goal is not for you to be an expert on Section 1202. And there's a lot more things on Section 1202, and I just select the one that qualify, more related to the small business owners. So I'm not listing it all comprehensive, all inclusive. No, it's not like that. And what I give you is just to impress you So you remember that. And when you are doing your own business selling, you will recall Yin was talking something about that. Let me ask the attorney and whether he knows something about that. Maybe he can think in that direction. Knowledge is power, folks. Knowledge. And there is no tax preparer I know out there to destroy tax payers. Sometimes I have clients coming in, their taxes was wrong, or they're qualified business but didn't get the exemption, whatever happened. And it is not the tax preparer knows it, but don't tell you. No. It is because they just didn't have enough business experience to really relate your situation to others they experienced. Maybe you are the first one ever come to them for this kind of sale. So when you are running a successful business, folks, you really need to engage yourself with a CPA firm that has the knowledge, has the background, see more cases. And a small CPA firm, they might be dedicated, they might be growing, but they're not there. They're not yet looking at all these cases and understand that, yes, that one can be applied to you. So who qualifies? I want you to remember, it's individual or LLC. And LLC doesn't mean that LLC doesn't mean that you elected to be S Corp, so you are not LLC anymore. Remember I said LLC elected to be S Corp. That is actually like a girl likes to dress like a boy. So it's a treatment. It is not a change of gender, right? So LLC and the individual and the stock issue to LLC and the issue to individual that qualifies. What I mean by that is if you have a C corporation, the shareholder is not a company, a corporation. It is a LLC, or it is you are the shareholder, then you qualify. And it has to be a small business. It's a domestic eligible C corporation at the time of stock is issued, which means that if you set up a corporation, you register as a corporation under Secretary of State, and you issue the stock at the time, and then you are qualifying. The stock is acquired directly from the small business at its original issuance in exchange money of property. So what that means is just when you set up the company, you know how you put in $1,000 as a capital basis, and why you put in 1,000? And in that case, it's because you didn't have any other asset coming in. So that 1,000 is the value of your idea to set up that company. That's it. That's your base. But what if you set up a corporation, but you bring in your vehicle because you're going to do a taxi company, you're going to do a fleet company, you're going to bring a truck, a semi-truck into the company. Then your capital investment is the value of the semi-truck, $45,000, right? And so that is your original issuance. You issued $45,000 worth of stock for you to be the main shareholder, the shareholder of the company. And during the time the shareholder holds the stock, the small business is engaged in qualified trade in the business, and I use 80% of the assets in the qualified business. Okay, so this is where you understand you must be a qualified business. So I'll give you the definition in the next slide, but you need to know that your activity, your 80% of your assets need to be used for the qualified trade business. So that's one qualifier. Okay, so you need to get there. And then small business, your gross asset is 50 million or less. So with that, you qualify for capital gain exemption and up to 10 million. Qualified business. So this one, you can take a screenshot of that to see whether you are the business. If you are the business listed under here, that means you don't qualify for that 1202. And if you are not listed here, that means you're qualified. And I can think of the construction company and the manufacturing, those are the ones typical. And, you know, there's also other, for example, if you have if you have a business that engages service that is not skills of one or more of its employees, and then that would be qualifying. So you can see the spirit of what doesn't qualify, what qualifies. So does community CPA qualify? No, because it says that accounting firm and is not included in the qualified trade or business under Section 1202. Make sense? So you want to see that hotel, motel is also there, and the restaurant is there, and some similar business is there. So you want to see that whether you're qualified or not. And if you're a job agency, do you qualify? Yes. Why not? Because you are an agency, or you're running the employee W-2, and so it is, you are not a brokerage services because you don't make commission. You're actually running the employee through your agency. Okay, so these are the places where your attorney, your CPA would make a good determination for you. And the taxes on share sale for sellers. Last slide, and I want you to know that, and the sale of the share has no consequences to the company. So your company tax return is actually simply took over by the buyer, and you don't do anything with the company tax return. It doesn't really decrease or increase your company tax return, because the share is owned by you, right? By you, and so you report the capital gain, but not the company. Okay, remember that. The shareholder selling shares will become liable to pay taxes. That's shareholder. And remember capital gain. If it is more than 365 days you have the business, and your capital gain is long-term capital gain is 20% or 0%. If you didn't have any other income, you just have this capital gain, then a lot of it will be taxed very low at 15%, 0%, right? And the seller may deduct the acquisition cost of shares from the sales price. What does that mean? And if you sell your shares, and for example, you sell $4 million, but you actually have to pay brokerage firm for $500,000, then that is your expense that you don't pay taxes for. All right. So just make sure if you're thinking of selling, and just for this 30 minutes, I want you to know that it's actually more complex than you think. So you want to engage professional, get that plan out, rather than just jumping to sales thinking you got it. I got the money, I got it. No, you didn't get it, because there's a lot of things you can do to help you to be more tax efficient. All right. Okay. So this is our today. We ran over a little bit, and we started 2 minutes late, and we ran over like 10 minutes. I hope you still got something from this a little longer session, and you know that you can email us at Community CPA at Ying, Y-I-N-G, my name, and at communitycpa.com. You can go to our YouTube channel to check out our history of talk and really learn from there. And I promise you, I'll fix my audio. I had my audio issues for two. This is the third webinar. I have audio issue. I'll fix that, and I will see you again on Saturday, folks. Okay, bye-bye.